in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg brief. Let's get you set up for the day. Concerns around a debt binge for AI, the budget deficit and inflation all fueling a global bond rout. Risk off in equities as well today. Oil pushing higher as prospects dim for a US-Iran MOU extension and as another vessel is attacked in the Strait. And Meta headed to court as a landmark social media addiction trial begins, with potential penalties of as much as $1.4 trillion. Let's get a check on markets now around the world. We'll begin with Winnie Su in Hong Kong for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. Well, as you mentioned, it's really all about bonds today. We also saw that Asian bonds following those losses that we saw in treasuries from the likes of Australia to New Zealand and, of course, to Japan. And that is really showing up in the Asia session today, especially with Japan. We also have these local fiscal concerns, as well as the expectation for the Bank of Japan to raise rates given the weakness in the yen. However, the bright spot actually is in the 5-year in Japan, because we did see yields falling a little bit after those strong auctions, showing that the demand was at the highest since June last year, driven by the high yields showing up with some attractiveness for investors as well. Now flip aboard and see how that's affecting the broader Asian market, because definitely adding some pressure, especially to the tech stocks given the high valuation. That is why you're seeing Japan's Nikkei 225 leading losses down about 2.5%, and also dragging the broader Asia index down about 1%. After 4 days of gains. Now, overall, we are also seeing some weakness from the Japanese yen, inching closer to that 160 level against the dollar, driven by that the strength in the oil prices as well.
All right, Winnie, thank you so much for all of that. Now we get to London for a look at the European session. Here's Justina Lee.
Good morning, Bonnie. Now, it's also all about bonds here, with the Stoxx Europe 600 down 0.5% in the 5th straight daily loss today, led by a lot of those tech shares. A lot of the time, when long-end bond yields fall, it's bad news for these kinds of sectors that count on long-term cash flows. Now, looking at, obviously, the bond market here, we can see a rise in bond yields for the UK 30-year yield. And if we flip the board here, there's also a focus on German bond yields today, because they're selling these long-end 30-year bonds, and it's kind of risen, with the yield risen to a 15-year high. Of course, that's kind of reflecting some broader global trends here. But we've also seen Germany talk a little bit more about defense and infrastructure spending, and that's also fueling that rise in yields, Bonnie.
Well, interestingly, Justina Lee, thank you so much. It is all about bond yields here in the United States as well, and we did it. We hit that 2007 high yesterday, 531. Today, we're at 532.10 on the 30-year yield. Now, across the curve, we're seeing yields move higher, but much more so on the long end. And we are seeing some steepening, but remember that 2-year yield was at 425 just a couple of days ago, so we're really more seeing it at the back end, as we all know at this point. We're going to be speaking a lot today about Ed Yardeni's comments about bond vigilantes, perhaps pushing the panic button at some point. But let's look at equities, because Ed also had a comment about equities. He pulled up a model that Alan Greenspan used to see whether the S&P 500 was over or undervalued relative to bond yields way back when, and he found that when he put it to work, it actually shows that the S&P is not overvalued when it comes to bond yields, that won't happen until we actually hit 5% on the 10-year. So I guess we can rest easy when we see all of these records. Now, we're not going to see a record potentially today because futures are pointed lower. Risk-off sentiment, that global bond rout, is not helping. All sorts of turmoil potentially in waiting there. But also, obviously, we've had some great days. The Russell 2000, for example, hit a record and has had a nice streak, and so it's lower as well. And then, of course, there's oil to think about. We are higher once again on oil. Brent crude just off its highs of the session, but it is still close to 91 a barrel. And New York crude just below 85. Gold as well, 11 straight sessions now where we're higher. We're obviously off just a little bit today, but we're pushing that $4,400 mark. All right, let's get to some individual market movers this Tuesday morning. For that, we'll go to Chloe Melly.
Good morning, Bonnie. We are seeing AI-related stocks are down this morning. They've given up the gains from the rally yesterday. And so, as you mentioned, we have this risk of sentiment setting in, and that is dragging down the likes of Nvidia, Intel, Broadcom, etc., and really weighing on U.S. futures as well. So very much red across the board there. We are also red for Fabrinet, which is down quite significantly this morning after it reported results that actually beat expectations, but it had disappointing sales in its datacom segment. And so this underwhelming performance in that really key division is something that investors have really focused on. And so we're down more than 9% this morning on the back of that earnings print. And finally, H&M has been placed on a positive catalyst watch by Citi analysts, with the analysts saying that the company should show quite a bit of resilience at the fiscal third quarter results later in September. And so we're up about 3.4% in Sweden this morning on the back of that upgrade.
All right, Chloe, thank you so much. Chloe Melee will be back later in the hour. Also coming up this hour, more on this bond sell-off with Katrina Dudley of Franklin Templeton. So, long-dated bond yields pushing further into multi-decade highs now as sovereign bond borrowing rates rise around the world. US 30-year yield, as we said, at the highest since 2007. Joining us is Bloomberg's Van Ram. Then I mentioned Ed Yardeni's notes saying that, he's not pushing the panic button, but he is watching whether the bond vigilantes will at some point push it, maybe when the 10-year yield gets to 5%. What would that look like? Would it be a buyer strike? Would it be some kind of turbulence?
I think it'll mean higher volatility, and I think that if you look at the volatility measures, the CBOE's volatility measures, they are still rather muted. So I think that those will stir to life if that happens, if what Yardeni is saying happens. But I think there is a distinct possibility that it may indeed happen, because you've got these hyperscalers issuing loads of debt. They've issued 1.5 trillion worth of debt just so far this year alone, putting it on course for the biggest fundraising since 2020. So I think that what we are seeing is the combination of hyperscalers issuing greater debt. Then we have got the fiscal concerns, which have been lingering in the markets for years now. And then we have also had inflation that has been running hot for 5 years now, uncontained at 2%, above 2%. So, you've got a perfect storm of mix that is inducing all this in the bond market. Now, we are higher in. Interestingly, we are in a situation where the structural interest rates are resetting higher, and that's the most important takeaway here, because just a few years ago, we were in this 0% inflation and 0% interest rate regime. Now we have moved to a 5% interest rate regime. That's a huge flux in a space of a few years, and that shows that demand for funds is higher, and that is affecting the equilibrium rate or the neutral rate for funds.
Then what can authorities do for the long end, monetary or fiscal, short of engineering some kind of economic slowdown?
Well, what they can do, and certainly within their means, is the power to bring down inflation. Now, we have seen this environment where if you look at UK, inflation is not under control. If you look at the US, we haven't had 2% inflation for 5 years now. And in Japan as well, they're trying to come to grips with inflation. So you've got this situation where inflation is not fully contained, and the authorities can certainly bring that down to inspire confidence in the markets that when they say 2% inflation, they do mean 2% inflation.
Really quickly, then, there's a lot of issuing at the short end now, and it's all around the world. We just had very nice demand in Japan for 5-year JGBs. Just hypothetically, what is the problem with issuing more at the short end if that's what the Treasury has to do?
Well, I mean, if you're going to issue them at coupons that are going to be taken out by higher yields subsequently, it imposes losses on bondholders, which is why there is a cost to all this, and which is why investors have been, even though today's Japan issuance was well received, I think the secondary bond market is the ultimate judge of what happens in the bond markets, and there the yields are marching higher, and that shows that bondholders will face losses if they are buying into a higher rate environment.
Then, as always, thank you so much. Wonderful stuff on M Live on the Bloomberg as well. Must reads. Bloomberg's Van Ram. Oil gaining for a third day. A near-term resolution of the US-Iran war looking very, very cloudy now, with President Trump saying he's not interested in an extension to the agreement with Tehran after expiration yesterday. Tehran actually saying that Trump's comment about communication back channels being open was delusionary. Let's bring in Abir Abu Omar now from Dubai. Not only that, but we also have another vessel attacked in the Strait. Abir, what, if any, efforts are ongoing?
Yeah, that's important to note, Vani, because in the early hours of our morning, we saw a report by the UK Navy saying that an unidentified projectile had hit a vessel in the Strait of Hormuz. One casualty reported there. And just now, our energy team's actually reporting that a fuel tanker in the Strait of Hormuz was making erratic moves before settling next to the island of Qushm in Iran, which really means that Iran is trying to really assert that dominance that it's been touting over the Strait of Hormuz. But when it comes to the expiry date on that ceasefire with that MOU, that, according to Iranian officials, has been rendered meaningless. They've said that multiple times, and that is due to the violations, the multiple violations, as they claim, that have been committed by the United States. President Trump also says that he doesn't want to extend that. So now we're left in a state of limbo when it comes to those wider talks. Iranian and American officials are reportedly not talking. But the talks that are still ongoing, and again, according to multiple reports over the past couple of weeks, are those that are happening between Iran and Oman to really reopen or find a mechanism to reopen the Strait of Hormuz. Over the past 2 weeks, or the good part of the past couple of weeks, Vani, we've reported that those talks have been in the final stages. There's no update on that. They still are in the final stages. But then when we talk about this war and the escalations that we're really seeing in the region, those parameters are really widening, because we're seeing lots of parallel fighting, namely the one that is happening between the Yemen-based Houthis and Saudi Arabia. So the latest we know is that not just the Strait of Hormuz, which is a crucial waterway to shipping across the world, but also Bab el-Mandab, another very crucial choke point in the Red Sea, is under attack, possibly the biggest escalation in that waterway since 2020. And so we're seeing parallel fighting, we're seeing a widening of the parameters, and it's not just the Yemen-based Houthis, it's other militia that is backed by Iran. Of course, yesterday we reported attacks on the southern part of Lebanon that were the deadliest since that June MOU. And so we're seeing Brent prices reacting to those physical hostilities that are happening on the ground right now. NY crude, of course, at 85, and Brent above that $90 on the barrel mark.
Abir, thank you so much. That is Bloomberg's Abir Abu Omar. Now to other top stories trending on the terminal this morning. Anthropic is on track to generate annualized revenue of more than $65 billion. That's up more than sevenfold from its pace at the end of last year. The dramatic acceleration in revenue comes ahead of Anthropic's plans for an IPO as soon as this fall. Hong Kong's move to cut taxes for hedge funds triggers maneuverings across the city's financial sector. The new tax bill includes a broad expansion of tax exemptions on carried interest. Mark Walter has explored selling his stake in Chelsea Football Club to Clearlake Capital. People familiar tell Bloomberg that Walter's family office reached out to the firm, but no decisions have been made on a potential sale. PWG Global, Walter's holding company, has been looking to pull off various deals as federal prosecutors scrutinize his insurer's balance sheet. Coming up, $1.4 trillion at stake. Meta's social media addiction trial set to begin today. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Meta headed to a California federal court later today as a landmark trial is set to begin. The tech giant is facing a jury trial on youth social media addiction, with potential penalties of as much as $1.4 trillion. Bloomberg's Balazs Pence joins us now for more. So a federal trial, a jury trial, Balazs, what is the court tasked with examining and ultimately answering here?
Well, it boils down to one thing, Vonnie, whether these algorithms were designed to get people, get children hooked on social media, whether they were designed to to start some compulsive behavior. So this is different from the previous debates, which mostly looked at content. And ultimately, the courts found that that content was protected. So there was no recourse for the state over the content on these social media platforms. These are now coming at it from a consumer protection angle and trying to find whether the design of these algorithms have violated those state statutes on consumer protections. We're talking about the endless scroll. We're talking about the recommendations. They're trying to find whether there was anything untoward the way those were designed. There's a secondary question about data protection, which is a federal statute, whether these platforms, whether Meta handled minors' data without the consent of their parents, whether that ran afoul of some federal laws. So those are the two main things the court is going to be looking at in this one.
It's going to be an incredible trial to follow, and arguments that will, I'm sure, be just extraordinary. Now, we talk about the penalty being as much as potentially $1.4 trillion, but what would likely happen to Meta if it were to be found liable or guilty, or whatever the term would be here?
Well, the 1.4 trillion is obviously an astronomical figure that comes right up to the market value of the company. Now, legal analysts that we talk to tell us that that is probably mostly for shock value, to get people's attention and to show the symbolic nature of this trial. But it is based on some calculation of the number of people potentially harmed and putting a dollar value on each of them. But if they do have to, if they are found liable in this trial, then they, at the very least, will have to change the way they operate. They will have to change the algorithms, and that has wide-ranging consequences for the entire industry. Where the actual penalty might end up, that's very early to speculate, but certainly that 1.4 trillion does grab people's attention.
And just, Balazs, how long are we expecting this court case to last, roughly?
At least a few weeks. There will be testimony. There will be deliberations. We will hear from several states. We will hear from Meta, of course. So this will be a relatively lengthy trial, but as you said, it's going to be fascinating to follow along.
Absolutely. Balazs, thank you so much for all of that context as that trial begins today. That's Bloomberg's Balazs Pence. This is Bloomberg. Higher metal prices helping BHP with a full-year profit increase by almost a third. CEO Brandon Craig, who began leading the miner last month, spoke with Bloomberg's Heidi Stroud-Watts. Take a listen.
For large porphyry deposits, which Escondida is one, and that's dominant in Chile, grade decline is entirely normal. You have to continue to invest year on year into these assets to continue to grow the volumes. So when you have a look at the plans we have underway currently at Escondida, we're going to be building a new concentrator. That new concentrator will allow us to more than offset the grade decline to be able to produce the copper that the world is going to need. And that's important because Escondida is the world's largest copper mine. You know, the world in some respects depends on the success of that business, so it's important that we make those investments successful. But in addition to Escondida, we also have very attractive projects in Argentina, with a project called Vicuña, which is a joint venture with Lundin Mining. And we also have very attractive growth options right here in Australia through Olympic Dam. So you put all of that together, and we're going to be able to put together a growth program over the next 5 years that will lift our production in copper by 50%. And when you consider that we are already the world's largest copper producer, adding 50% to our production base over 5 years, that's pretty attractive.
You've already said that the bar for copper M&A is going to be high. Are you restless for more assets, or are you too focused on sort of execution versus more ambition?
Well, when you look at the quality of the organic pipeline we have in BHP, the copper intensity of our investments ranges between $16,000 a tonne and $30,000 a tonne. If you had to go and try and buy a pure play miner on the market today, together with a takeover premium, you'd have to pay $85,000 a tonne plus a takeover premium, so call it, you know, well over $100,000 a tonne, relative building our own copper for $20,000 or thereabouts. So you're talking a factor of 5 to 1, which I think really showcases why the organic pathway we are choosing is so attractive to us.
It's a challenging broader environment to be doing business, particularly when you're so heavily reliant on global supply chains, right? What's been the impact of the Middle East crisis?
It's something we've watched very closely, of course, because the Middle East supplies crude products that go into refineries in Southeast Asia, which translates into diesel for companies like BHP. What we've learned is that the supply chain risks in terms of experiencing physical disruptions have actually been lower than what we expected. But how we have seen it play out is more in the pricing space. So input costs for critical commodity inputs have gone up. So diesel has gone up. The cost of ammonium nitrate has gone up. The cost of acid has gone up. So we've had to work very hard to offset those cost increases because of what's happening in the Middle East. But at this stage, we haven't seen any disruption risk to our business.
That was BHP CEO Brandon Craig. Time now for your front page news. First up, the New York Times reporting Jared Kushner met with Israeli Prime Minister Benjamin Netanyahu for several hours Monday in an effort to break a logjam over President Trump's plan for Gaza's future. Netanyahu has refused to pull back the country's military until Hamas fully disarms. Next up, the Financial Times reporting airlines are locked in a standoff over whether to cut ticket prices as jet fuel costs just begin to ease. The industry looking to maximize profitability after a chaotic year, and the FT says airlines are watching rivals closely. And finally, Bloomberg reporting Jeannie Buss is challenging the sale of her family's stake in the LA Lakers to Joshua Kushner and Bob Iger. Coming up, we're going to speak with Katrina Dudley of Franklin Templeton. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Concerns around the AI debt binge, budget deficit and inflation all fueling a global bond rout. Risk off in equities today too. Oil pushing higher as prospects dim now for a US-Iran MOU extension and as another vessel is attacked in the Strait. And Anthropic on track to post upwards of $65 billion in annualized revenue, bolstering plans for an IPO. So let's check the markets then. We're back down to 531.99. I say down, we were actually above 532 a little while ago, but we're already at that 2007 record, which we hit yesterday. We were anticipating that it might come. Took a couple of days, but indeed it did. We also learned that foreign holdings of US Treasuries fell in June from May, which was an interesting statistic. And we have our Ed Yardeni out with a note today talking about bond vigilantes and how he's not pushing the panic button yet, but he is watching whether the bond vigilantes will, particularly if the 10-year gets to 5%. It's a very interesting note from the creator of that term. So as we see yields higher across the board, but much more so at the long end. Equities-wise, we're seeing a risk-off session, at least in the pre-market. S&P futures pointed lower, Nasdaq futures really selling off, and Russell 2000 futures pointing to decline after a nice streak for the Russell, which sent it to a record yesterday. And then you have oil trading, well, with a little bit of trepidation. We're off our session highs, but just below $91 a barrel on Brent and below 85 on WTI, and gold having a string of gains, a little bit off today, but buying from all corners of the universe, central banks, ETFs, and so on, even as yields go higher and the dollar weakens. Let's get to some individual market movers now. Here's Chloe Melly.
Good morning, Bonnie. Nvidia, Intel and other AI-related names are in the red this morning, giving up some of the gains from yesterday's rally. As you mentioned, there is this risk-off sentiment taking over the market, and we are seeing that reflected in those shares for those companies, as well as on US futures more generally, which are also down, as you've mentioned. We are also in the red for Fabrinet, which is down about 10% in pre-market trading this morning after disappointing Datacom sales. And so this is a really key division. So the fact that there was an underwhelming performance there, that really overshadowed what was overall quite actually solid results. So we're down as well there. And finally, Baidu is in a focus after a fifth consecutive quarter of revenue falling. It really goes to show that it's a company that is struggling on its AI development initiatives. And so we're down about 4% there in terms of the ADRs. All right, Chloe, thank you so much. A down day across the board there with Chloe Melly.
Well, from AI borrowing to government spending, a myriad of market risks fueling a global bond sell-off. 30-year Treasury yields at their highest since 2007. Joining us at the desk is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Can I start with the 10-year, Katrina, because we have Ed Yardeni talking about the 5% mark for the 10-year today. And, you know, a lot of people have mentioned that as a sort of a line in the sand. We're at 472.99, so basically 473. But that's only 27 basis points away, and we moved up 45 basis points in just a matter of weeks. How soon could we get to 5%?
Well, I think that a lot of people are forecasting a rate hike. I think it's 35% probability in actually the September meeting. I think some people are looking at the midterm elections and kind of punting that rate increase to the December meeting because of just the influence on the election. So I think that, you know, there's a third of the market that is telling you that the rate hikes are coming. And, you know, we've got this inflation narrative as well. And so you look at the PPI number that came in, you look at the CPI, and it suggested moderation, and you saw the markets react to that. However, we now have this additional layer, which is Iran's come back on the table. We kind of had thought it was in the background. You know, we now have an indication that, you know, oil's starting to, you know, raise its head again as an inflation concern. And that inflation concern is what I think people are starting to worry about.
Is this a structural shift that will stay with us even after the Fed does its thing and, you know, gets inflation under control, given the structural shifts in the global economy? You know, things like fears over supply shocks, continually persistent inflation coming to haunt us.
I do think that we are in a market where inflation is going to be well above 2%. Now, when I say well, I'm not talking 5s and 6s, but I'm talking well in that 2 to 3% range versus, you know, some of the very low numbers that we've had. And that, I think, is as a result of, as you've indicated, the supply chain shift and that shift into the United States. So we're actually onshoring a lot of our manufacturing, and that's slightly more expensive. You secondly have, you know, some of this commodity price increases. We're seeing oil price increases, and those two are inflationary. So I think that from our perspective, you just have a lot of these inflation concerns. They are going to be persistent, which keeps those yields high.
So you're just back from Australia, where they're having a similar problem, right? But also they had the first, or at least the first US AI debt offering, right? So there's competition between the AI offerings and sovereign debt worldwide as well. Does that continue to crowd out sovereign bond buyers?
I think that there is enough capacity in this market to be able to accommodate the amount of AI debt that is coming. And I know that there's been a lot of narrative about, you know, being very, you know, pessimistic about what's coming to the market. But everything that's coming to the market is being priced, and it's actually being placed. However, we had the narrative in the beginning of the year. We were talking a lot about this ROI on AI. And I think that a lot of people were negative that companies were just spending all this money. What we've got are two data points that I think are really significant. First of all, the top 1% of AI spenders are spending about $7,400 per employee on AI. The second thing, as we go through second quarter, we're starting to get commentary about the returns on AI. Now, you have certain companies, Chime Financial, Dow is another example, where they're cost cutting, so they're reducing labor forces. But you've also got other companies such as Box, which is saying we're redeploying, and that's going to generate revenue growth. So we're starting to see these use cases and this AOI, return on investment. We're seeing it in our own business at Franklin. And so I think you're going to continue to have this narrative. And as long as AI starts generating returns for the companies that are spending, I think you have that justification for the continued CapEx.
Are you saying that you're continuing to be optimistic about stocks, or just the stocks that report an ROI on AI?
So we believe that earnings is what drives stock markets. And if you have a look, I mean, second quarter earnings growth was 47%. We're a developed market, and to print that type of earnings growth, and the earnings growth was across a number of sectors. If I look on a full year basis, actually all 11 of the S&P GICS sectors are generating positive earnings growth. So that's actually a really nice setup for a broad market as well as a positive market in terms of underlying growth. And so I think that we think that we are continuing to have positive earnings growth. Then we look at the valuation. And I would say that, valuation alone is never a reason to sell a market. We're trading on forward earnings estimates with about 13% growth priced in for 2027 at a 19, just over a 19 multiple. The average is 17. So we're not in cheap territory, but we're definitely not in expensive territory. And then finally, I think we were just talking before the break, some of the numbers in terms of the bullish sentiment, that's where we're a little bearish. I mean, that so many people are bullish, and with bond yields being so attractive, there could be some shift of incremental capital back into the bond market given the yields.
Okay, so that figure that we were talking about was 56% of fund managers polled in a Bank of America poll are overweight equities, which is the highest level since November 2021, right after COVID, right? And cash allocations are down to 3.5%.
Exactly. So that's in and of itself what the risk is. People are overexposed to equity markets. Some of them have done it on a levered basis, and so that if you look, people are thinking about the equity markets are not particularly cheap. I've got a lot of bullish sentiment, so you may have a pullback in the short term. But we would actually say, given the earnings setup and given the earnings growth that we're seeing for 2027, it is a buying opportunity. I think one of if we look, the AI negative narrative about the jobs situation, we don't believe is the case.
If some equity investors flee to the bond universe, as you say, is a threat, they're maybe not doing it immediately, where would they go? Where would be the best value?
I always say that the United States, because of the currency certainty, you're not actually
and on the
dealing.
curve?
And I would say probably out onto the 30-year curve because the yields are attractive. So I think that you have that, but I think taking too much of a duration bet is a little difficult. I think really you're playing the bond market here for the yield and the carry.
Yeah, absolutely. Katrina, always wonderful to speak with you. Thank you so much. That is Katrina Dudley of Franklin Templeton. Now to other top stories trending on the terminal this morning. Guggenheim ties its bonds of $135 billion insurer Samson's Financial. They fell to their lowest since they were issued in June and were among the weakest performers in the U.S. investment-grade bond market on Monday. More than 80,000 homes and businesses in Hawaii remain without power after Storm Lala damaged the state's electrical grid. Some customers potentially face months without service. The Justice Department is launching an investigation into the College of William and Mary over whether some of its scholarships and financial aid are discriminatory. The probe is focused on whether the college's financial programs appear to be in defiance of the Supreme Court's 2023 decision banning racial preferences in admissions. Coming up, no truce extensions. President Trump holds his hard line against Iran. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. An impasse over a resolution between the U.S. and Iran keeping oil prices higher. President Trump saying he'll not try to seek an extension to that MOU with Tehran, which was pretty much defunct already anyway. Joining us from Washington is Rachel Schilke of Bloomberg Government. What's the alternative, Rachel? How do things move forward from here? Are there any efforts ongoing?
Well, right now, I think everybody's just kind of waiting to see what shakes out. Obviously, the deal is not officially over yet, but I think that a lot of people in Congress and a lot of people in the administration want to see some sort of deal struck as soon as possible, especially as we keep inching closer and closer to the midterms and the war remains very unpopular among Republicans, including some of Trump's supporters. So it is something that they're going to have to shore up very quickly.
Yeah, Trump saying that back-channel communications were open, but Tehran and an IRGC spokesman basically saying that that was delusionary. So we'll see what happens. Now, on the domestic front, the president has been talking to some leaders, Mark Carney being one of them. They were talking trade because negotiators are battling over autos. What's the latest here?
Yeah, so the president and the Canadian prime minister spoke about trade negotiations. You know, the U.S. is due to implement some new tariffs on Canadian products, and that's something that has been going on for the last year. And tariffs has also been a point of contention here on Capitol Hill. So a lot of people do support the tariffs, especially on the Republican side, but there are some people who have warned that putting tariffs on our allies can come and bite us, kind of in the back a little bit moving forward. And tariffs also have been kind of hurting a lot of different communities around the country, especially with farmers in rural areas. So the people are waiting to see kind of what the next step in tariffs are to see if that will impact them here at home.
Yeah, absolutely. And similar negotiations ongoing with Mexico as well. Rachel, thank you so much for the update from DC. That's Rachel Schilke of Bloomberg Government. Turning to tech, Bloomberg learning that Anthropic is on track to generate annualized revenue of more than $65 billion, up more than sevenfold from its pace at the end of last year. The AI startup accelerating revenue ahead of an IPO as soon as this fall. Joining us now is Bloomberg's Neil Campling. So that's about what Eli Lilly reported last year. It's a nice sum of money, Neil. Now, revenue isn't the only metric that investors will judge a company on, but how do they manage to grow it so quickly?
Yeah, it's quite stunning in terms of the absolute growth number, Bonnie. I mean, clearly they are monetizing AI because they're selling the tokens to the corporates, as opposed to, say, OpenAI, which is more for consumer use. Now, the kind of number, to put it in context, they've only been in operation for 4 years. For 4 years after Google launched, they were only at $1.5 billion of revenue. And it took Google 16 years to get to this kind of number. So the numbers are simply stunning and show no sign of slowing.
Yes, and I imagine that, they're anticipating trying to grow that number as well. Can we talk about Nvidia, because it's backing a phase of an OpenAI project up to $105 billion. Jensen Huang saying, no, this is nothing like circular financing. There shouldn't be any of those kinds of concerns. But to some extent, Nvidia is acting like a bank or a vendor financer, right? I mean, should it be regulated? Does it have to adhere to some of these regulations at this point?
Yeah, you have to wonder. I mean, this is going to become a key focus, a new focus, I think, within the earnings call next week, Bonnie. I mean, we talked about last week on Before the Bell that the bank of Nvidia was becoming a concern for some equity investors, despite the fact they're using, they're arranging deals with some of the big private equity and Wall Street firms. These kind of discussions keep coming to the forefront as to, are they funding the ecosystem to keep their own AI chips and technology set in advance of others? But it's raising those circular concerns. There's no question about that. And you can see it through the CDS spreads.
Yeah, exactly, which continue to widen versus peers even. How is OpenAI responding to all of this, particularly the Anthropic reveal, right, the $65 billion? Now, we know that OpenAI has talked about $40 billion, and we're not sure that they're measured the same way, so we shouldn't compare them, but it's something to go on.
Yeah, so I mean, this is we are. Bloomberg News is reporting repeatedly on Anthropic's supernormal growth, whereas OpenAI, we seem to be getting less details on their financials, which will raise concerns, I think, as to whether they're falling behind. And clearly, it looks like Anthropic's IPO is likely to come to the market before OpenAI.
Does one cannibalize another, Neil? So you are either Anthropic or you're OpenAI, or is it possible for the same customer to use both companies?
Look, it's possible to have more than one system, but we know in technology that often there are two major technologies that drive ubiquity and growth. The question is whether OpenAI can monetize theirs to the same level, because at the moment, Anthropic, it's more likely to move down the corporate curve to being used across other platforms, including for general use by us as consumers, I think.
Yeah, absolutely. Neil, thank you so much. That is Bloomberg's Neil Campling across Everything Tech for us. Retailers set to report earnings this week, starting off with Home Depot before the opening bell today. Let's bring in Bloomberg's Maddie Parker for more. We've just turned positive now in the pre-market on Home Depot. It had been negative a little bit earlier, Maddie, but what are we expecting to hear today about the consumer?
Yeah, it'll be interesting to see Home Depot results. We know that some of these big box kind of home improvement retailers have been victim of some of that dampened consumer sentiment over the past few months. We know that discretionary spending has kind of pulled back a little bit on some of those renovations and appliances they sell. Having said that, analysts are expecting sales to be reported to grow in their latest results. We think that actually some of that sale can be driven by their kind of professional contracting business, and actually gives Home Depot a bit of a boon over some of its rivals. People like Lowe's, which are another retailer due to report results soon, actually have a bit more emphasis on that DIY side of the business, which has seen a bit of a hit. But on the professional contracting side, it looks like that Home Depot could benefit from that shift.
Yes, and indeed, it's a fascinating read on the housing market, right? Because oftentimes people won't buy a house if mortgage rates are rising or what have you, but they might actually undertake some kind of home improvement using, you know, materials from Home Depot. What will we be looking for in terms of what Home Depot says about the housing market?
I think we'll be looking to see if they're saying that it's still obviously resilient. We know what the housing market is looking like at the moment. The question is really how much consumers are also willing to spend on actually doing up kind of that new sort of kind of housing stocks coming in. We'll see how confident people are feeling. Often it's quite a good bellwether of how people are feeling about the wider economy, how they're feeling about employment, how they're feeling about their disposable income as well. The other thing to really look out for in these results as well is that Home Depot, along with some of these other retailers, might see a boost from kind of some of those tariff refunds as well. They had previously commented that tariffs might indeed kind of increase prices for consumers. So some of that kind of tariff rebate might help to offset some of the kind of higher supply chain costs they've been experiencing as well.
And it'll be a look at the consumer, a look at housing, but also a look at construction and, you know, the contractor economy, if you like. Also, the weather, that tends to play a big role in Home Depot and other home goods retailers.
Yeah, definitely. And of course, we've seen some pretty stark and kind of warm weather over the summer. We know that weather, I mean, across retail, you often hear about retailers talking about how much heat waves can impact kind of the business that they do. In home renovation, the story remains the same. So it'll be interesting to see what they say. And particularly in the most recent period, obviously, where we've seen some of those weather trends come through. It'll be interesting to see how consumers respond and whether they'll be kind of taking up the opportunity with the good weather to then go and do some of the renovation on their homes.
Now, obviously, the main competitor will be Lowe's, which we'll get later in the week, but we get other retailers as well. Which ones will you be most watching for the best bellwether of the US consumer?
I think, honestly, some of these other kind of big box retailers, obviously a lot of the names that we talk about across Bloomberg, people like Target, Walmart, Lowe's and Home Depot as well. I mean, they are really some of those companies that you can kind of really tell how the consumer is feeling over how much they will spend in those places. I think that so often some of these kind of big box retailers get a bit of an edge actually when consumer sentiment is down, when people are feeling the pinch a little bit more in their purses and seeing how much they're actually willing to go out and spend. I think some of those big ones like Target and Walmart are ones that we always keep an eye out for in terms of really getting a gauge on how the US consumer is feeling across the board.
Yeah, so much real-time data. Maddie, thank you so much. Bloomberg consumer reporter Maddie Parker. Coming up, we do have some housing data on deck as well. We'll get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead in your Tuesday session. First up, we get US housing starts and building permits. That's at 8:30 a.m. Eastern. Earnings then from Home Depot coming in before the bell, and then Lazy Boy and Toll Brothers with another look at the housing market reporting after the market close. And Meta's federal trial begins. It's defending itself against claims of deliberately engineering social media addiction in young people. Let's take a look at some micro movers. Nvidia leading Mag 7 stocks lower today. Of course, it has run up in the last few days, but the bond sell-off is definitely biting risk appetite. Fabrinet down 10%. Datacom sales disappointing investors there. Barclays did upgrade, though, saying that its data center sales would be doing well. And Baidu down 4.25%. The ADR is here falling as a cash outflow from Baidu hastens on soaring capex. It's the usual story. All right, that is it for Bloomberg Brief. Surveillance is next, and this is your macro picture with the 30-year yield close to 5.32.